Hello, and welcome back to Coin Lady channel. Let's say 2 to 25 guys, right, or till the collapse, I suppose, is the target audience for today's video, in which we'll discuss the current state of the macroeconomic scenario. Guys, you can't make this stuff up, but things look rough, so let's have a chat about it since the sun will rise despite inflation rising to 3.7% higher than expected and shattering your knees. Extremely impressive. We need to rein in inflation immediately, people. First things first, while these investments continue to rise. What will the Federal Reserve do if inflation increases? Naturally, you should attempt to dial it back down. 2% is their goal. That's really important, you guys. This means that rates will continue to be raised ever higher, in a literal sense, folks, further weighing on the value of digital currencies and stocks. Furthermore, there are additional indicators that a black swan event could be on the horizon. Here, have a look. This is the first time since November 2022 that crude oil prices have been above $90. You know how oil goes up, right? It's not good for us writers to put our names on items like that. The price of oil has risen by a staggering 35%. Guys, in just 3 months. Okay, then. The United States currently has less than 46 days' worth of supplies in its stockpiles. And ACCS reserves will soon experience the traditional sell high, buy higher scenario. So, oil prices are back up to the $100 range. Right. Alright, then. Guys, this is oil. Now available, pure crude. Check out this. There's been some progress, right guys? That's a very bad sign. Seeing Biden is not good for inflation, therefore I intend to bring gas prices down again. There will be plenty more for you to do, though. I will work to lower gas prices once more. I swear to you. The road to Bidenomics. Think back, how was the economy under Trump's watch? So, how did the economy fare during Joe Biden's presidency? Right. Do you notice a distinction? Plus, the dollar is on the rise again. Money is pouring into this asset like water off a duck's back, and it shows no signs of stopping. Enormously. Take a look at that, it just continues going up. The future of cryptocurrency pricing and the stock market may be predicted by this. To add insult to injury, there appears to be insider trading going on right now. The CEO of Video recently dumped $50 million worth of new shares, and the stock promptly dropped 60%. Sure, in a few of months, right, dudes? And these particular stocks, like Apple's, have been propping up the stock market itself. The CEO of Nvidia made their latest insider sale on March 1, 2022. Odd, huh, that Nvidia stock dropped 60% right when the banking crisis hit. Within a few months of making the sale, that's a little bit weird, isn't it, how he knew right then? Even though equities tend to rise following an initial sell-off, he made a poor decision and got out of the market before it recovered. Think on what is happening right now. These crypto assets are currently being pumped by the stock market. The Federal Reserve is having a meeting, and we're going to talk about it. The CEO of Nvidia just sold a large number of shares. He's made 3 sales in as many months, or days, in this case. You can't make this stuff up, yet in the last few days he has sold Nvidia stock worth $100 million. What is it that he knows that none of us do? Right? It seems to reason that if you plan to liquidate your stock holdings or cryptocurrency holdings, you anticipate that prices would decline. What the heck possessed him to sell? What the heck is he thinking selling his stock? He would live if he thought Nvidia would continue to rise, and that's not likely to happen. Right. I don't know, people, but this might indicate that there's an impending downpour. Nvidia's insiders bought $0 and sold $276 million during the past 3 months. Is it clear to you now what we're not being told? That's right, and their lies are unraveling before our very eyes. So, let's look at several metrics and indicators that suggest a recession might be coming soon. Okay guys, please pay attention. It seems to reason that if a recession is looming, stock prices and cryptocurrency values will both crash. The Federal Reserve will swiftly intervene here to prevent further damage. That means there won't be a total meltdown, right? That being the case, we will continue to pump relentlessly until the system breaks down. And that's when everything starts to go apart. In my perspective, this video is not financial advice, and each of you should do as you see fit with your own money. But I'm simply keeping an eye out. I want to be one step ahead of the pack. If you aren't at the forefront, you'll inevitably fall behind. Why those in the know are aware of something we aren't: insider information. We need to meet them where they are, on their turf, right guys? Similarly popular is Remember Us by Nance. May the upcoming Italian recession be a black swan caused by Nance. Indeed, it is fascinating. And the value of cryptocurrency falls precipitously. I can't say. However, let's take a look at some numbers. A soft landing is more likely if it looks like a recession, acts like a recession, and sounds like a recession. Now look at this, what do we see? Which brings us to the recession of the 1990s. This is a 10-year treasury with a continuous maturity of 3 months less than the treasury's stated maturity. Okay. When the line fell below zero, we could see it. Recession of the 1990s.com bust. Take a look at what happened every time the global financial crisis fell below your 2020 recession threshold. We've never had it this bad before today. Right? It's possible that the line will bounce back up to the zero mark. Look for the obstacle. Right around here is where things start to go downhill rapidly in terms of price. Right? Then the root of the problem is discovered, and a foundation is built upon it. After that, everything falls apart. Right. The Biden in them assures you that everything is alright, so don't worry. Right? Simply said, inflation is just temporary. Keep a close eye on California. Examine these indicators carefully. Predictions of what will happen in the future. The unemployment rate has increased from 3.8% to 4.6%. There has been no corresponding drop in the U.S. unemployment rate. Currently, no. We're climbing, and oh no, the outlook is not good. Considering that California is dark, this block line is slowly climbing as CSF estimates 4.6% growth. In a word, it's falling behind the times, fellas. It makes sense to me. That chasm is starting to reopen. Interesting. What does the future hold for me, then? We're in a downturn, aren't we? Take a look at the results each time, folks. True, the jobless rate has increased. We're in the midst of a recession. 2008, 2001. To repeat, dudes. So, this is essentially a secret code, right? It certainly appears that way. Therefore, if they occur, we can expect a rise in the unemployment rate. And if there is a recession, gentlemen, it will be just like the 22 or something even worse. Surely it will go quickly. I don't believe they're going to drag it out for too long. They'll probably just give us some soup and a few saves and get us back up and running in a day or two. However, these are merely signs or hints. It's not a sure thing, guys, especially because we'll be discussing the Federal Reserve in a little while. And just after this tweet or so, no, I mean if a couple tweets, but first things first, banks are swiftly tightening lending rules. And we all know the Fed will keep rates high for a little longer. A credit crunch is a real possibility, so be prepared. So this is why banks are become more cautious. They know a recession is coming. And every time the numbers went up, from 2008 all the way through 2020, we experienced a recession. Here we are, men, we've arrived. We're in the neighborhood, so to speak. Even if a recession or black swan appears imminent, this tells us something important. There will be no economic meltdown. As far as I'm concerned, the economy will not crash, in my opinion. Okay. Since we haven't seen final versions of these bills, we can't sell them as of yet. Representative Justin Khanna has proposed a new reform plan that would place restrictions on members of Congress engaging in lobbying activities, donating to political action committees, and trading stocks. Roe has urged Biden to join the anti-corruption initiatives. What part of the strategy are you people missing? It's so obvious that if they don't pass this bill, the economy would suffer. Stop all members of Congress and their families from trading stocks. The collapse won't happen unless and until it's officially embraced by the guys and written in stone. Right? This is likely to be the last, or at least one of the last, opportunities for such a large and significant wealth transfer that these people have had in decades, and they intend to make the most of it. Naturally, they are. After 36 years of pull-up politics and a salary of $193,000 a year, Nancy Pelosi is still seeking re-election to the House of Representatives, according to an analysis published only 3 years ago. She amassed a fortune of $90 million through shrewd stock trading and effective lobbying. This is too unbelievable to be true. What gives? $193K, guys? Raise her income to over $100 million per year? Stock transactions totaling close to $500 million. She used insider trading strategies, just like the males do who want to amass fortune by entering politics. True to the letter. It's the simplest solution. Next, you turn to your companions and inquire, "Hey, what's the news with this thing? Was the news with that?" before swiftly engaging in a deal. To top it all off, you can use leverage to increase your earnings even further. I mean, that's what the SEC is supposed to be doing, right guys? We have no idea. However, it's likely that they dumped XRP before it was officially released. I don't know. Who knows where they'll be trading or shorting XRP in 2022. Then the price dropped drastically once the announcement was made, and they made a killing. In 2022, these 97 members of the United States Congress made money trading stocks that committees have a hand in deciding to buy or sell. On Geyser Gasco they sat. Socks for the street are what they all are, right? You can't even call them politicians. They are businessmen. And why? Now let's discuss the 3.7% increase in US inflation. This matters a lot because the Fed won't take a break. They may arrive the following week, and that would be okay. As we can see, however, CPI inflation has jumped to 3.7%, necessitating an ACS increase in excess of what an expert had predicted, thus they plan to keep raising rates at their forthcoming sessions. What, exactly, does Jerome Powell want to do at the upcoming meeting? Correct, the date set for it is September 19th. That's the 20th. Third Fed Chair Jerome Powell has suggested another rate hike is possible to keep inflation below the 2% target set by the federal right. However, forecasts from the Fed Watch tool indicate that the central bank will pause its rate hikes shortly, maybe at its future meeting. There is currently a 9% likelihood that the Fed will raise interest rates by 25 basis points at its meeting next week. Right. As the general public seems to agree that they're going to pause is something I assume, too, guys. The clincher, though, is this. And then they're going to bring it up again in the meeting after that one. Till they hit 2%, you just can't make this stuff up. Because they are so set in their ways, it sounds reasonable. According to JP Morgan Chase's Justin, the Federal Reserve has completed its interest rate hikes and will pause further increases beginning next week. So, there you have it. Is that really the case though? This could be true. Here, have a look. This is how JP Morgan's worst-case scenario could materialize if interest rates are temporarily frozen, and JP Morgan announces that it has finished hiking rates. A black swan event will happen in the next month or so. Boomtown, right, and then everything just collapses. And that's when the Federal Reserve steps in with a pause or maybe even a rate cut, right? Print a lot of money, at the very least. The Fed may leave interest rates steady for the time being, nevertheless, as reported by The Economist. They speculated that the Fed could delay rate cuts until at least April or June in order to engineer a later date. Right. But if the Fed does cut rates next year, do we really want them to be lower? Would you say that's a positive development? Look at the initial rate cut price drop because Greenspan missed the S&P stock market. The price has seen yet another significant drop. The following will be a price drop. That's why we'd rather invest now than hold off until prices stabilize. For the time being, let's wait and see what develops. It looks like they're headed down the third possible road, and that means a roller coaster ride. If these things happen, I hope we can just let them rip it off for now and let the building collapse later. It's all over today. Please like and subscribe my channel. See you later, bye.